Hello everyone, and welcome and thanks for joining us today. This is the second installment of ACI's Real-Time in Real-Life video series, where I'm delighted today to be joined by Mastercard. And to help us discuss the real-time nature of Mastercard's Liz Oakes.
Thank you, Craig.
I've heard this statement before that, we've moved forward a generation in payments in just a couple of years. Now, I think I would actually push back on saying that it's only the pandemic that's caused that. It's not. This wave of digital change was already underway before the pandemic. I think it accelerated it in a few places. It caused more segments, more different types of merchants and corporates to engage in digital payments than maybe before. But I'm not of the opinion that it's only the pandemics that's caused it. It was already underway. We've seen that in Asia, in India, where there's been huge digital service growth and huge financial inclusion that was already pushing forward.
We're not necessarily coming from a low adoption point in terms of consumers or businesses or individuals wanting to use real-time payments. The question is more, what have they had available to them and what do they have available to them now? Wallets have typically taken over in North America to fill those use cases where people were trying to send money to each other or trying to do something in real time. And so as we move forward now to look at account-to-account transactions, which are not wallet funded as in the real-time sphere, it really has to be 100 times better, because actually the consumer is used to using many of the wallet providers that they've been using for quite some time. It's fairly easy to design for the kind of 90% or the 80% and the young people and the early adopters and the people who are digitally savvy, and you can send them videos and they'll follow it on YouTube and they'll figure out how to do it. But trying to get your parents or your elderly relatives or somebody who's not really that convinced to be able to do this stuff, and sometimes to do more complex maneuvers or contingent payments. So I'll pay when I get the money in, or I'll set things up so that this will all work. That's a little bit more complicated. And I think that that's what we've been forced to try to address in the pandemic.
How can a bank support the sheer choice that their customers are expecting?
So I think the question is whether or not you can actually mobilize the funds to the location where the customer expects to see them, whether they're a corporate or a bank or an NBFI or a consumer. And that's, for me, the ultimate question. So definitely we need to do lots of education. I think that's incumbent on all of us across the piece. And we've seen that, where even banks are deploying strategies to help their consumers and their customers to engage digitally.
So there's a lot of conversation at the moment, Liz, about central bank digital currency. It does make you wonder whether we separate clearing from settlement and actually focus on all of these different services that consumers may want to use for clearing, but then use settlement within central bank digital currency. Potentially that could be a way of enabling more services and more customer choice.
And so when I started to understand, the complexity of Bitcoin, of Tether, and how some of these things actually manifest, it's quite evident that it's a sensible approach by central banks to actually look at, well, how should we be participating in this market? I think it's incumbent on central banks to figure out how they provide safety, resilience, and certainty in that market. That is for their role in terms of actually managing the stability of the currency. So in that sense, they have an obligation to protect consumers and businesses and banks in that context.
And thank you everyone for joining us on this edition of Real Time in Real Life. We'll see you again soon. Thanks very much.